Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to another episode of Forecast Update Live, a new series from Everag Insights, where each month we will gather to discuss the dairy market forecast. I'm your host, John Spainauer. We're joined today by Erica Medke and Phil Plord. To get us started, Erica Medke is going to give us a rundown of any changes from our forecast from last month.
So one of the changes for the 2023 year is cutting into the cheese numbers. So for the June, July, August time period, we took between 16 and 20 cents off. And we'll talk a little bit about that as we get into our bull bear section, but certainly seeing some weakness on the demand side in the cheese space. The other big change looking at 2024, we elevated our butter numbers pretty significantly. So butter is up more than 20 cents as we look at the calendar 2024 average.
Thanks, Erica. That's quite a change to the 2023 cheese forecast, as well as an equally significant increase to the 2024 butter forecast. Can you and Phil give us some sort of insight into what may have caused those adjustments?
So, John, on the cheese side of things, we're really just kicking the can down the road. We're seeing some slowdown in demand right now. Cheese supplies keep coming, and the market has corrected us as we take things lower.
There was some expectation before that, seasonal forces, maybe we'd see milk production down and the third quarter numbers would firm up, but it just hasn't happened, right? And so at some point you just got to say, well, Q3 seems to be a write-off.
On the butter numbers, so 2023 has remained fairly elevated, and we're seeing buyers remain very active at prices that maybe are higher than many people would have expected. So as we think about the buyer's willingness to pay, and they're not deterred by these levels in the 240s, they might not like them, but they're definitely taking some coverage. So as we think about setting budgets for 2024, we don't think that budgets will be set at that $2 level, but really the buyers will still be active. It'll be at a level below current numbers, but it won't be to the extent that we had things coming down last forecast.
Thanks, Phil and Erica. Let's dig into our bull bear segment, where each month we ask one of our panelists to take the bull side of the case and another panelist to take the bear side. To start us out, let's start with Erica, who is taking the bear side.
So, John, again, to follow up on the forecast numbers, I would say on the cheese side of things, demand is really the story. And seeing a general slowdown. And for a few months now, we've been talking about slow exports. And for those folks who are subscribed to our Trade Trends publication, they will see, one thing I want to highlight there is Southeastern Asia. Overall demand for cheese is down. And what's interesting is within that smaller pie, the U.S. has lost a significant share. So Southeast Asia tends to be one of those swing players, very opportunistic. New Zealand won, and they won big. So they really got a good chunk of volume, the most they have in more than a decade. And a lot of that was at the expense of the United States. So one point to justify that slowdown in exports. The other part is we are feeling a slowdown domestically as we talk to clients and as we look at some of those numbers. Just seeing a rippling in the supply chain as things slow down at retail and food service. Also seeing some folks right-sizing their supply chain. So these inventory buffers and stocks throughout the system, when you have less flowing through, you need less buffer. And with higher interest rates, it costs more to hold extra product. So we are seeing slower orders and hearing about that from our manufacturing friends. The other thing, while the futures market does show a good carry, so the deferred futures in cheese have a premium to it, we are hearing that it's hard to move that old cheese. So even with 30 or 40 cents of gain in a hedge position, you might still be upside down when you go to sell that physical product. So cheese is definitely not looking really strong in terms of sales in the near term, hence the reason the forecast numbers come down. And then as we shift over to butter in the near term, we could see some weakness further in butter. GDT had a 231 print, so there is opportunity for the United States prices to come down as we are the highest in the world. We will continue to see butter numbers and inventory go up. especially as more imports come into the United States. So while we have seen some softness at the CME this week, we're down in the 230s. There is some more room we could go lower. On the non-fat side of things, I would say we're still in the spring flush, coming closer to wrapping that up. But as demand slows down throughout the entire dairy supply chain, anything extra gets balanced into powder. So there's the opportunity for more supply.
Thanks, Erica. Let's move on to Phil, who's going to come at us with the bull case this month.
It's still pretty lonely over here in bull land, John. Not many friends joining me, and around the bullish campfire. You're able to stay plenty warm. No competition for the marshmallows over here. I think that with the bullish case, we're kind of left with some cliches like low prices cure low prices. But I do think we are at the point on the milk side, the milk price side of things, where prices have dropped to painful levels on the farm. We've seen it coming for a while in the futures markets, and then we've been rolling lower. But I think that these last round of milk checks are really in the pain zone. And while it's no fun for dairy producers to be on the low prices, cure low prices situation, I think that the numbers we're hearing out there are sufficiently discouraging to milk production. And with high cattle prices, offering a pretty nice exit ramp for producers that just want to cull animals. So I think that we're starting to really believe that the milk production retreat is upon us. We hear of more auction notices. I think it's here. Now, it still takes a few months, but our milk production model turns negative in July. And so, less milk in the U.S. is a reason to believe that we could turn around this price regime. Secondly, European milk production seems to be sliding as well. European milk prices are down substantially from their 2022 highs. And our information, our contacts say that it's starting to bite in terms of producer finance. And the expectation is that EU output will drop as well. And that's been a big issue from a global supply standpoint. European comparative strength has certainly kept world markets amply supplied. So I think supply contraction in the US and the EU, and then, low prices cure low prices is also a demand phenomenon. With wholesale US cheese prices, in $1.50 area, we could see some really aggressive promotions spin out at retail. I don't know if that we're quite in 10 for 10 territory, but we got to be getting close. And while export sales, longer duration export sales are hard to claim, and the forward curve is a problem, I think at $1.50 type numbers, we can be in the mix for some spot sales and maybe some substantial ones that, like we saw in March earlier this year. So I think that we are at price levels that should be buying back demand. On butter and powder, I think powder is just sort of sitting here. Seasonally, I think that we should see prices go higher. And if milk production does start to contract, class 4 usually is the first place that the milk doesn't go. And so, we could see those domestic powder prices increase. On butter, demand is still okay. People are not afraid to pay, as Erica said, $2.40 something for product. And maybe if it gets hot, whatever, we can see a little run here. So I would say milk production contraction and buying in U.S. and Europe and buying back some demand here and globally as well would be the two reasons to be bullish at this point.
Every month, we try to bring a unique perspective to the economics of the dairy market. We've dubbed it Favorite Look. Phil, you've got a great one this month, and I would say that it is certainly a unique perspective. Can you give us a little bit of insight into this month's Favorite Look?
Yeah, this month, our Favorite Look involves data from the New York Federal Reserve on consumer credit card debt outstanding. And when that data came out, it showed two things that were historic. First off, consumer credit card debt outstanding did not shrink between Q4 and Q1. It was flat. It almost always declines because Americans, we go through the holidays and then we pay off our credit card bills in January and February. And so historically, we see a decline in credit outstanding in that first quarter timeframe. We were flat. Haven't seen that in a while. And then the total was $986 billion. That was up 17.2% year over year. And that was the biggest year over year change in credit since, I believe, 2001. So it's been many years since we've seen something as big as that. What this is telling us is that consumers are increasingly turning to their credit cards to maintain spending in this hyperinflationary environment that we've seen over the past several months. So, in my estimation, there's been some room to grow credit in relation to earnings. Delinquency rates aren't really that bad. They did tick up in Q1, but they're not at the rates we saw in the financial crisis of 2008, 2009. So I don't feel like we're off the rails, but it does show a consumer under strain, and we can't be growing credit at 17% year over year, persistently. I think we are going to run out of real estate before too long. This challenging environment is one reason that we're not all that excited about upside price potential in the dairy markets anytime soon. Demand growth is going to be difficult with the consumer kind of backed up against the wall.
Thanks, Phil. You and your team are always great at bringing a perspective like this to the table. That'll do it for this month's episode of Forecast Update Live. Thank you to all of our panelists. Thank you to everyone from the EverAg Insights team for their work on the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. And for June Dairy Month, the EverAg's Insights team is offering a free trial for some of our world-class publications. Check out the link in the description for more details. If you like this video, be sure to subscribe to our YouTube channel. We'll see you next month for another edition of Forecast Update Live.